Be Wealthy and Smart, episode 806.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why I like cryptocurrency, because I had a real change of heart earlier this year, and I want to share with you my thought process and some education about cryptocurrency, because I think there's a lot of misnomers out there. I know there were certain things I thought about it that turned out not to be quite accurate, so I wanted to share my perspective with you and just talk a little bit about that. But before I do, first of all, to all of our American listeners, I want to wish you a happy Thanksgiving. I hope you had a great day yesterday with family and friends and are staying very healthy during this time. I myself got to eat outside at a nice country club and had a fabulous turkey dinner. So that was awesome. It was about 71 degrees here in Southern California. And so that for us in the desert is a little bit cooler with Santa Ana winds. So I was bundled up a little bit with sweaters and boots, but it was a great time. Let's talk a little bit about what's going on with the stock market before we get into crypto, because I do want to address a few things. First of all, did you realize that from the lows on March 23rd, the NASDAQ is up over 78%? And the S&P is up over 62%. Yes, that's true. From the lows where we were encouraging you to buy in and to be very aggressive because it could be the buy of a lifetime, it turned out to be a fabulous buying opportunity. And we were bullish all the way into October, and then saw valuations really start to get out of hand. Now, I did a podcast a couple of episodes ago about how the smart money is leaving the market. And one of the reasons is because the market is up so much and we all have great gains. And why not lock them in rather than be too greedy trying to get right to the last dollar before we have a more serious correction, perhaps? The market doesn't always go up forever. You have these pullbacks, of course, as we all know. And so when you have large gains like this, it's not unusual for the market to correct and maybe even correct sharply. The market's pretty much gone sideways since we got out, although the Dow did hit its all-time high of 30,000, which was a lot of hoopla and a lot of celebrating. But it's kind of misplaced because the Dow is up 5.4% year to date. And that's not even an average year for the stock market of our target 8 to 10% return. So even though the Dow hit an all-time high, being up 5 or 6% year to date, well, doesn't get me really excited. So I think there's more hoopla around the Dow hitting a new record than any serious performance. And I think I know about you. I think you're looking for serious performance too. But there's a lot of fear of missing out around the stock market, and people are a little bit more crazy about investing in the market right now. We are seeing the fear and greed levels get to extreme levels. And we are seeing about a 91 on the fear and greed chart, which is very high. So this is a time to get cautious. This is not a time to be super bullish. When I look at the top 100 tech companies with the QQQ ETF, it's looking a little weak to me. And I don't see how we can go a lot higher with the S&P 500 or the NASDAQ, certainly, without those top tech stocks, the mega tech stocks, doing well and leading the way. And then we look at valuation, and we have the exciting news of Tesla being added to the S&P 500. But when we look and see a PE ratio of 1,000, it's just off the charts crazy. A 1,000 PE ratio means you're paying $1,000 for the next $1 of profits from Tesla. That's what that means. You're paying $1,000 for one additional dollar of profit from Tesla. That's how crazy that PE ratio is. So am I feeling real great about all of that? Not really. It's just sending off a lot of warning signs and red flashing signs and alarm bells and all kinds of things. So having said that, today I want to talk with you about cryptocurrency in general and what I really found when I started doing the deep dive research on what cryptocurrency really is and why it's been going crazy and what I'm seeing for the future. And is there any undervalued situation that might be happening in cryptocurrency? Because really what I found is it is super undervalued right now. And when I look at the overvaluation of the stock market, I am a lot more comfortable with some of the long-term prospects that cryptocurrency has. So what is cryptocurrency? It's a digital asset that has a limited number of tokens created, basically tokenizing value. And it can be a payment, it can be a store of data, it can be a non-confiscatable asset, it can be something that's easily transferred, easily carried. There's a lot of advantages to cryptocurrencies. Now, initially, I was very excited about the blockchain because I could see where blockchain technology of being able to register what's being bought, what's being sold, and having every transaction have a record to show its authenticity, to prove that it's there. The blockchain was something that really intrigued me, and that technology I could see a lot of use for. But the cryptocurrency just seemed to me to be made up of hot air. It wasn't a tangible thing. It was hard for me to see how it could really have value. But once I started looking into it, I realized that this is the next age and part of the quantum age that we're going into, that we are going to digitize assets. Being in a digital economy, it doesn't make sense to have to carry heavy bars of gold or heavy bars of silver around with you. And that's sort of how paper money came into existence. But now with paper money, we don't have them backed by gold or silver anymore. They're fiat currencies. And that means that they're at risk of losing value if too much supply is created. Well, what are we seeing today? We're seeing governments all over the world have a lot more supply than they used to. And that means that currencies are in risk of devaluation, which is what I talked about on that podcast with John Malone and how he is concerned about a devaluation of our currency. And he's a very savvy billionaire, corporate executive, and the largest landowner in America. Even though I realized maybe if you create a digital asset and you guarantee that there is only a limited number that will ever be created, yes, I see how that can maintain its value, and I can see how that will eliminate inflation. It will eliminate the prospects of money printing or more creation and devaluing the value of that asset. Okay, I'm on board with that. I can see that. But it's still just a digital asset. It doesn't feel real. And the thing that really turned me off was when Mt. Gox was hacked and people lost a lot of their Bitcoin. That made me feel like, why should I invest in something that feels very non-secure? And then, of course, we saw the craziness of Bitcoin as we were entering into the bubble in 2017. And I talked about the absolute insanity at the peak of that bubble and recorded an actual person really going crazy. I mean, it was insane. That whole experience was really interesting to watch. And it was so classic. It was very much like the year 2000 bubble in the internet. And the same things were happening. And since that time in 2017, I thought, okay, well, Bitcoin was a thing. It was here. It spiked into a bubble and popped. And now there's all these investors, billionaires, talking about how they're buying Bitcoin. People like Stanley Druckenmiller and Bill Miller and Paul Tudor Jones. And that got my attention because I could see a lot of hedge funds wanting to move into Bitcoin now. I could see a lot of billionaire investors wanting to move in. It is even related to an investment that Warren Buffett made, which is the SBI investment through Japan. That is tied into cryptocurrency. So you see, I was starting to see indications of some very wealthy people moving into this space, and that really piqued my curiosity. But still, I felt there was something to Bitcoin about being somewhat of a dark investment, just not having clarity, not knowing who created it. I was very uncomfortable with that whole scenario. I don't want to invest in something that might have a back door that somebody secretly put in that they can wipe out the whole thing. I don't know if that's possible, but that is where my mindset was. I only want legitimate things. I'm a very conservative investor generally, and this was not something that seemed right for my kind of investment. So all of those things went through my head when I was researching all about cryptocurrency. But what I found was that Bitcoin isn't the only cryptocurrency. Right now, there's 7,000 different coins, and I do not believe that all of those are going to make it. Again, like the internet bubble, I think there's a lot that will fade by the wayside. But in this whole space, there was one that really caught my attention, that really made a lot of sense. And I'm not going to go into detail about that one today, but I am going to say that I think it is the next version of Bitcoin. It improved upon some of the limitations that Bitcoin has. Because even though Bitcoin is limited in how much was created, it does have a downside or two. And the downside is it just consumes too much energy to mine the Bitcoin. And that amount of energy is not going to work for a mass adopted cryptocurrency. And also, it's very, very slow. So when you're doing a transaction, it can take a very long time to make the transaction go through. So you see, there were two big drawbacks to it. Those two really struck me, that it just might be a store of value, perhaps, but I was looking for something a little bit different, something that could be used globally and that wouldn't take up energy and that could be very fast in its transmission. So what I found, I consider Bitcoin 2.0. It's kind of like when we started in social media. Do you remember there was a company called MySpace? And that was the big first mover. And apparently people were on MySpace. I wasn't, but apparently a lot of people were. And that was a big social media thing. And then Facebook came along. And basically the masses adopted Facebook. And there were a lot of people that were never on MySpace that came on to Facebook. And Facebook became the standard, and that's where the massive wealth creation happened, was in Facebook stock. So that's sort of how I see where we are with Bitcoin. I think that there's going to be a next level Bitcoin that's going to improve upon it and is going to be where the mass adoption happens. But one of the reasons that Bitcoin has the incredible price of almost $20,000 a coin right now is because it has clarity from the regulators that it's not a security. And Bitcoin and Ethereum got that clarity, and other coins do not have that clarity. So because those two coins have that special clarity, they've been able to really gain in value, particularly Bitcoin. So I believe in the future, there's going to be clarity given across the whole asset class, and that will allow some of these other digital assets to also gain a needed level of legitimacy and clarity and regulatory scrutiny by the regulators. And that will make me feel much better as an investor. But I see that it's really almost in place right now. So how have Bitcoin and Ether gotten the clarity that they're not securities? Well, I'm not exactly sure how they got it, but what I do know is Senator Tom Cotton of Arkansas wrote a letter to the Director of National Intelligence, Ratliff, and the National Security Advisor, Robert O'Brien, and said in his letter that he wants the SEC to develop a clearer articulation of policy and ultimately formal commission guidance addressing digital currencies to ensure U.S. companies have the chance to lead. And he goes on to say, so far, the Commission has concluded that only two digital assets should be considered non-securities: Chinese-controlled Bitcoin and Ether. Those are his direct words from this letter. So he's asking for clarification. We want more clarity on these digital assets. We want them categorized as non-securities so they can move forward and they can have legitimacy and we can compete with other Chinese digital assets, because China right now is working on a digital yuan. So we're right about to have this clarity, in my opinion. Now I want to shift gears for a second and share with you something from my book, You're Already a Wealth Heiress, Now Think and Act Like One, 6 Practical Steps to Make It a Reality Now. And in my book, I talked about the wealth building formula, MCT, which is money, compounding, and time. So how much money you have, what rate you can compound at, and how many years you have to compound is the wealth building formula. Also in my book, I talk about how businesses traditionally have been very powerful money engines to compound money. And I talked about Inc. magazine and its list of 5,000 fastest growing companies, because it really is mind-boggling to see some of the growth rates of small businesses. And I just want to read to you a little bit from my book on page 117. It says, we tend to think of money engines as stocks, bonds, precious metals, or real estate. Over 70% of the wealthy got that way by creating a business. I believe that is because a business allows you to compound at incredible rates, which I'm about to show you. I have talked about how it is easier than ever to start a business online and create lifetime income streams. Now I'm urging you to call on your wealth heiress to get started. Let's take a look at Inc. magazine's list of 5,000 fastest growing companies. To make the list, the 5,000th company was growing at 40% per year, and the fastest company, that is number 1 on the list, grew at 50,058%. Stop thinking about double-digit rates of return and open your mind to the fact that higher, much higher rates exist, just not in a no-risk investment like a bank CD or a savings account. Here are a few success stories from that Inc. 5,000 fastest growing companies list. Kristen Pumphrey started PF Candle after she lost her job and started making soy candles in an amber-colored jar. Her big break came when West Elm picked up the line. It grew from a one-person operation to 25 people, and her 3-year growth rate was 2,075%, which she said validates all the late nights and long hours. She is proud the business was completely bootstrapped, started in a second bedroom without any business degree or experience. Next is Lauren Stokes. She did not want to go back to work after giving birth to her first son, so she and her husband started a clothing company, Lauren James Enterprises. They started with Keep Calm and Stay Southern t-shirts and expanded into other products on their website and Instagram. Now at $13.2 million in revenue, their 3-year growth rate is 6,010%. Next is Sarah Kaus. She wanted to rid the world of plastic bottles, so she came up with a line of stainless steel water bottles, some of which are covered in Swarovski crystals. After founding her company, Swell, in 2010, she is now the fastest growing woman-owned business in the country with a 3-year growth rate of 3,862% and revenues of $99.7 million. And then I go on to say, these stories are inspirational and the growth rates are astounding. I share these stories with you to show you what is possible. So often we reject an idea because we think it cannot be done or because we think it has been done before. Certainly candles and t-shirts are not the most original ideas, yet these women took them and made them their own. Not only did they make them their own, but they got astounding compounding rates. And that's what I want to share with you, because billionaires are getting rates of return in the thousands of percent in order to become a billionaire. Even Warren Buffett, investing in the stock market, is getting an exceptional return at 26% average annual returns for many years, which made him the wealthiest man in the world at one point. And so 26% in the stock market is considered astounding, but it will take you decades to create substantial wealth at a 26% return versus these people that started businesses and had these astounding thousands of percentage returns. So why am I telling you this? I'm telling you this because we're so programmed to think the only interest rate possible in our world is a 0.5% interest rate in the bank or 10% in the stock market or an out of the ordinary higher return on certain technology stocks, perhaps for a short period of time. The reality is some businesses are compounding at thousands of percents of rate of return, which is why many very wealthy people invest in venture capital firms. They invest venture capital in young companies, startups, that can grow at thousands of percentage rates of return, and that's how they build significant wealth. But in order to be a venture capitalist, you have to already be wealthy. You have to already have a 7-figure net worth. So not everybody can invest in those deals. And in addition, you have to have at least 6 figures to invest in those investments. So that rules it out for a lot of people, especially people that are trying to get started or trying to build their wealth and are in more of a wealth building phase rather than trying to extend a base of wealth that already exists in their life. All right, so now that we've talked about the frames of reference of different compounding rates, what I saw when I did my research and started really doing a deep dive down the rabbit hole about what is cryptocurrency all about and what are digital assets, what I found was that this was a very transitional time where we are moving into the quantum age and we are making a lot of changes in this year of COVID. Not only is it said that COVID advanced the rate of adoption of technology about 10 years because more people had to move online, use Zoom, go to telemedicine, etc. So too, is it going to change some of the way we do business? Already we saw PayPal this year come out and talk about accepting cryptocurrencies for payment. We also saw it with MoneyGram. And we're going to be seeing it with every vendor because every vendor is in the future, in my opinion, going to accept digital currencies. It may or may not be Bitcoin. I think it might be something else, but that's a whole nother story. But let's play a little game. Let's say that we're time travelers, and let's go back in time to the 1970s. For some of you, that's before you were born. But in that decade of the 70s, a lot of things happened. One of the things that happened is that mainframe computers started to get more important. And IBM, International Business Machines, was the most important company in that time frame. So if you were a time traveler and you were going from the future back to the past, you would know to invest in IBM and you would know that it would be a very successful investment. If you were a time traveler back to the 80s, you would see IBM was still successful, but now it was coming out with a microcomputer or a desktop computer, if you will, rather than a mainframe computer. So it was coming out with a personal computer for individuals. And not only IBM, but another company had great success, Dell Computer. So if you were a time traveler from the future and went back to the 80s, you probably would still own stock in IBM and Dell Computer. And then, of course, we needed software on the personal computer. So Microsoft came along. So again, if you could go back to the 80s, 90s, you would choose Microsoft as one of your investments because you would know that software was about to become ubiquitous, as were personal computers. If you were a time traveler who could go back in time to the 2000s or just before, you would know that the internet was about to come into existence. And you could invest in companies like Google, Amazon, Facebook, and Apple. You would know that from the internet, from that new technology, a lot of wealth was going to be created. And here we are in 2020. And now we have digital assets that came into existence in about 2014 and are just getting the SEC ruling, hopefully coming soon. At least our Congress people are pushing for that. You're also starting to see the adoption of payment plans taking different cryptocurrencies. Now, I believe that in the future, all banks are going to give you a digital wallet and you'll have the option of a cryptocurrency to buy. I also think in your brokerage account, you'll have a wallet and you'll have a cryptocurrency that you can buy. And those wallets will be very secure places for you to keep your cryptocurrency. So the security element of this would all be worked out. And in addition, there's been a little device that you can buy called a Ledger Nano. And what that does is that can actually take your cryptocurrency and take it off the internet completely so you can store it on this device and keep it in your possession. And that's the safest way now to store cryptocurrency. In the future, it'll probably be easier than that, but that's where we are right now. But I believe that we are going to be able to be completely digital. It's said that you'll be able to go to the grocery store and just walk out, and everything will automatically be calculated, and it'll be charged to your cell phone and your crypto account on your cell phone. You won't even have to go through the line to go to the checkout counter. So cryptocurrency is very, very early yet, but I do believe it's going to be adopted on a mass scale. And when that wall of money starts to come into cryptocurrency, I think it's going to be worth a lot more. And that's why I say that it's a very undervalued asset right now. Not only is it undervalued, it's a far superior technology to the banking SWIFT system that's used today, which is very cumbersome, has different softwares that don't really talk to each other very well, takes a lot of time, and is very costly to transfer money. Versus using cryptocurrencies, it can be done in seconds for less than a penny per transaction, and it can be used worldwide. I remember when the internet came into being and people felt very uncomfortable buying things online, shopping online, putting their credit card online. They felt very uncomfortable having any of their financial information online. It was all very uncomfortable at first, and there was fraud and there was a lot of bad things that happened. But over time, the security got better, and now we can't imagine not using the internet to do all of these things in our daily life, to do our banking, to pay our bills, to make brokerage trades, to go shopping. We can't imagine not using the internet for all of those things. And we don't give it a thought about security because that's been answered. And encryption has come into being that has helped with security. And so all of that got cleared up. But initially, there were doubts, there were bad things that happened, kind of similarly to what we've seen a little bit in the cryptocurrency space. So I think over time, the technology gets better, things get worked out, but in the meantime, we have our own cold storage offline that we can use to eliminate any of those issues. When I look at what is the potential for cryptocurrency, it is hard to put a number on it because, in my opinion, cryptocurrencies or digital assets are the way of the future. You see, any investment that we make in the future could be tokenized. You could invest in a property that gets tokenized and sold as a digital asset to investors in the future. You could tokenize a Monet painting, and people who want to buy a piece of that Monet painting could buy into a tokenized version of that painting. There's going to be so many things that are going to be tokenized so that you can invest in them on a digital basis that it really is the internet of value in the future. And I don't see how this isn't going to happen in the future. To me, it looks like this is the next level of the internet, and it's even bigger than the internet because it's actually going to hold all things of value. Every single thing can be tokenized. And what could really cause the adoption of this even more quickly is something like fiat currencies losing value. You see, the US dollar has already lost 98% of its value since, I believe, 1918. It's lost 98% of its purchasing power. And that's why we see real estate at such exorbitant prices right now. It's because the value of the dollar has declined. Our purchasing power has declined that much. And it looks like houses have gained in value that much, but it's really our purchasing power has been lost. And what happens if our purchasing power gets lost even more? Groceries, which a lot of our fruits and vegetables are imported, those are going to go skyrocketing in price. And when you see the purchasing power of your dollar lose value, it's going to appear like massive inflation. But with the balance sheet of the Fed expanding and them printing money like crazy and the value of the dollar declining, people are going to look at where else can I store my money? What can I put my money into other than cash that can be a store of value? For some, that might be Bitcoin. For others, that might be gold or silver. And for others yet, there's other cryptocurrencies that might fill that bill. So any issue in the banking sector or any issue with the dollar is going to possibly cause the fleeing of money into cryptocurrencies and digital assets. So all of that is why I decided to choose one particular cryptocurrency to invest in. And this particular cryptocurrency is up already 200% in the last year, and 124% of that was in the last week. And I don't think that we're anywhere close to being done with this. I think we are just on the very, very beginning of this journey. And for a lot of reasons, this cryptocurrency must go a lot higher in order to make it easier and less costly to use it as a payment system or as a store of value. Will it go up 9,000% like Bitcoin has since its inception? It's possible. I don't know, and I can't make any guarantees, but I will say that if I were a time traveler going forward and coming back, I think this would be the opportunity that would show up as the mainframe computer did, as the personal computer did, as software did, as the internet did, as internet shopping and search engines and social media did. I think this one is the one that is going to dominate this decade and for a lot of years to come. If what I've said to you makes sense and you like what you've heard and you want to know what, how, and why to buy cryptocurrency, I have a cryptocurrency tutorial in my VIP experience where you're also going to get monthly webinars with me live, weekly updates from me, and daily interaction on our private Facebook group if you're on Facebook. If not, no worries, you'll do fine with the weekly updates. If that's something you want to do, I'm going to offer you a Black Friday special, and you can join the VIP experience and save 50%. All you have to do is go to my website, lindapjones.com, go to Programs at the top of the page, then Products, scroll down to Be Wealthy and Smart VIP Experience, click that black button, and it will open the shopping cart. As a promo code, use SAVE50, SAVE in all capital letters, SAVE 50, and that will reduce the amount by 50%. Once you're in the VIP experience, there's no more cost to you. There's no monthly fees, there's no additional expenses. Once you're in, you have lifetime access. So if that's something you want to do, I'd love to have you in the group and be talking about our investment in this cryptocurrency for years to come. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.